Hi, everybody. You know why today is so exciting? It's basically Friday. It's also really exciting because it is the second day of the Finance Festival, Women in Wealth, in partnership with public.com. Who was here yesterday, by the way, in the chat? Tell us it was great. And by the way, if you all missed yesterday, don't worry about it. Go to the Ladies Get Paid YouTube channel. We'll be putting up all of the videos from this festival sometime in the next week or so. But quick introduction, who I am, what this is all about, and then I will hand it over to our moderator, Katy Perry. No, it is not Katy Perry, who you might be thinking of. This Katy Perry is actually better. You'll meet her soon. So just quickly, I'm Claire Wasserman. I am the founder of Ladies Get Paid. We are an educational platform and a global community that is all about helping women level up professionally, financially. We have the book, Ladies Get Paid. It just came out in January. Basically, if you want power in your life in all of the ways that you can define it, we want to be here to help you. And we do that through webinars, conferences, and this is our first finance festival ever. Started yesterday, and it's going all the way through April 28th. Lots of panels. This one, in particular, so I'm going to stick around. I mean, you're not going to see me because I'm actually going to watch this because it's all about how to invest in the stock market. And here's the thing, with Ladies Get Paid, we began with salary negotiation as a way to make sure that at least we are closing our own wage gap. But the money that you take home from your job, if it's just sitting in your bank account, particularly in your checking account, that's not making the interest, okay? And interest means free money, right? It's not making the interest that you could be making when you invest in the stock market. But there's a lot of acronyms, a lot of jargon. It's kind of intimidating. It also feels a little bit risky. It doesn't have to, okay? So I'm gonna be introducing these women who are gonna tell you basically all the ways that you can be thinking about investing your money and how you can do it. Right before I hand it over to Katy, I do want to give just a shout out to Lolli, The Balance, and to Public, because those are the folks who are allowing us to do this. Then they're allowing us to do this free of charge for you all, which is great. Katy's going to talk a little bit more about Public since she actually works there, and she'll probably do a better job. But for Lolli is the first Bitcoin rewards application that actually will allow you to earn and own Bitcoin when you shop online. Seriously, there's 1,000 brands they've partnered with. When you shop there, and I'm talking about Sephora in particular, personally, you actually get cash back, but that cash is in Bitcoin. And then The Balance is our other partner. But we have Lord Silbert here, who also works at The Balance. So she's going to tell you a little bit more about them, but just a big thank you to Public, Lolli, and The Balance. Without further ado, I am going to introduce, I've been saying this 1,000 times now, I am now officially going to introduce you to our panel, Saira, Rahman, who is the VP of Finance at HMBradley, which is a super interesting fintech bank startup that rewards you for how you spend and save, which is really interesting. Women tend to be better savers, by the way. And so HMBradley is actually going to be rewarding you for that. Lord Silbert, I mentioned, she is the VP and General Manager of The Balance, which is my go-to. I sound like such a shill. I'm really I'm speaking very personally here. When you Google financial literacy, any questions you have around money, The Balance is the best place, okay? Hands down. Somebody asked yesterday, where can I go? And I was like, The Balance. Okay. So Lauren's going to talk about the work she does there. We also have Judy, who is the founder of MoneyGirls, which is an organization that connects the rising generation of smart, motivated women with the knowledge, tools, and network they need to confidently and capably run their own money. They are basically like our cousins, our little sister cousins over at MoneyGirls. So I'm super glad that I can invite her to be part of the Ladies Get Paid family. Now I'm going to hand it over to Katy, who's the VP of Marketing at public.com. And I'm going to jump in the chat and watch with you all, guys. Have an amazing time. Enjoy.
Thanks, Claire. How's everyone doing? I think we got a lively crew in the chat. This is so exciting. I think, the stock market is definitely something people are talking about this year a lot. And that's great. It's great if you're curious about it. We're here to kind of just have a discussion around some key topics around investing in the stock market and how to think about it. This is not investment advice. We're not going to tell you specifically where to invest, but I think what you'll take away is demystifying some of these terms you might hear, because really they seem more complex than they are a lot of times. Thinking through your own investment strategy and how you want to approach this, and then some tips for educating yourself and really empowering yourself as an investor. So I'm super excited. As Claire mentioned, I work for a company called public.com. We basically mix an investing app with social. So it's a place where you can share why you invest and have conversations about investing in a very accessible way. Our community is 40% women, which we always want to be higher, but is something we're very proud of. And we have some amazing women already in the community participating every day. But today, I think this is just what it's all about. We're going to get some of these conversations in the open. Drop your questions in the chat as we go. One thing with the stock market, I always realize, is people throw around terms and expect everyone to know what those are. And the stock market kind of jargon around it has been made to feel complex and sort of exclusive over time. So there's no wrong questions. There's no bad questions. If you hear something and you want clarification, drop it in the chat. We'll all be watching. So really excited to kick off. The first kind of icebreaker question I had for everybody has to do with your first time, and that is first time investing, first time buying a stock. My first stock I bought was probably in like 2013 or 14, and for some reason I bought Under Armour because I really liked Under Armour. That turned out to be not a very well-informed decision, but that was my first time. So Judy, do you want to go first? What was the first stock you ever bought and why?
Yeah, my first stock, it's funny, was not something that I bought. I was at a startup called Quidzy, and I was an early employee there, and the company was acquired by Amazon. So my options there was converted to Amazon stock. And the reason why that resonates deeply with me is my husband was like, well, that's great. It's $300. You should sell them all because that feels really high. And I sold a little bit at 300. And then when it hit 500, my husband was like, that's like, get out, you know? And so I did. Don't feel too bad. I still have a little bit left, but it bums me out because I just straight up listened to his guidance without doing any research on my own. Or had I had a public, I would have been like, hey, how does everybody feel about where Amazon's at? So that was my first experience.
Yeah, it's fun. It's always easy to look back though. So don't be too hard on yourself. Saira, how about you?
So I had a little bit of a unique experience. My dad really pushed me to invest before it was legal for me to invest. So he gave me a little bit of money and said, do some research. And actually the title of the podcast that I do, Girls Just Want to Have Funds, comes from the book that he gave me, which was my 16th birthday gift, called Girls Just Want to Have Funds. I think the book is actually it's pretty crappy, frankly, but it did tell me, like, go learn and research and do whatever. And I am a dinosaur. And back then, Googling around for investment advice wasn't really a thing. So I really liked Apple. And to give you an idea of when I purchased it, it was around the time they rebranded. So those of you guys that are old enough to remember the two-tone computers, and they were failing. So I talked my dad into buying a little bit of Apple. And it was also my first huge mistake because Apple's stock started to skyrocket a few years later. The iPhone comes out, and I sold thousands of shares of Apple in my family's name. And I still think about the fact that I'd be retired right now if I hadn't made that mistake. So.
We'll definitely listen to Saira's podcast. It's honestly one of my favorites. Not to just fluff you too much, Saira, but it's Saira and her friend, and she's kind of helping her friend navigate really just even outside of investing, personal finance, and it's so entertaining. So look it up in Spotify. It's awesome. Lauren, how about your first investment?
So I was not very into investing in individual stocks. I was not a self-directed investor for a long time. I'd been, contributing to a 401k for as long as I was employed because that was what I was taught as like the thing that you had to do. So I didn't really invest in any stock specifically until much later. But the first stock that I really did on my own without anybody's help was like, okay, everyone is obsessed with these new Tesla cars, I'm going to buy a little bit of Tesla, mostly because I have an uncle who's like a Tesla evangelist and basically has bought every Tesla ever. And he was always my beacon of like doing the right things financially. And so I was like, okay, I'm going to buy a little bit of Tesla. And obviously the biggest mistake that I made was buying like $200 worth of it. And guess what? I still own it, but it's really not anything for me to retire on. So I'd say the biggest mistake is really not pushing more chips in when you can. I mean, it was really when they were starting to come out with the new lower price model car that they had. So I was saying like, oh, I can't actually afford to buy this car, even though I really wished I could. Let me just buy a little bit of stock, and it just wasn't enough. But it's still pretty cool.
Yeah.
I'm invested now also in Tesla, just not at the same rate that I was then.
Yeah.
I think it's funny how all four of our stories were like a little bit of I could have, should have a little bit.
Yeah, and I think also a common thread is when the emotional aspect creeps in, and that intersection, like money is a tool, it's rational, but with investing, it's you're sort of like watching a chart and thinking about it, and there could be an emotional pull of someone else selling theirs, and you have, not FOMO, but you think, oh, should I be holding it? Or you see someone else buying something and you think, oh, maybe I should too. And so I think a good kind of thing to think about is like being able to compartmentalize sort of those emotions from your decision making. But I think that's good segue into just level setting on the types of investing. One thing I've noticed a lot, I think drop in the chat if you followed GameStop. I think when I saw it on SNL, I knew that it was just everyone was talking about it. And it was funny because I work obviously at an investing app. Months ago, I was begging my friends to sign up. Come on, guys. And in that period in January, all of a sudden, everyone's in the stock market talking about it. And I think that's a good thing because people are paying attention and they're starting to wonder, oh, maybe I should look into how these systems work. And I want to know. But let's talk a little bit about different types of investing styles, because there are different types. There's sort of like the day trading that you might see in the memes. There's sort of like a speculative style, which is riskier. And then there's like longer term. And not giving any advice, how should people think about those two, or, it's kind of, you could be multiple styles. How should they think about them in the context of their own risk appetite, for example? Lauren, do you want to jump in there?
Yeah. So the best way to think about it is, I think a risk is a great way to think about it. What are you willing to risk right now? What are you, hoping to gain long-term, right? You're looking for long-term growth and something to create an additional income or at least a revenue stream for you when you're going to retire. You want to look at long-term investments. You're not going to be thinking about any of the meme stocks or any short squeezes or anything that's like super trendy and hot in the news right now, unless you've been hearing it trendy and hot in the news for years and years and years. The idea is when you're looking for a longer term investment, you really want to do your homework in what you're investing in. You don't want to just see what's like hot right now, what's selling well in the marketplace. You want to like look at the company, look at, try to understand their earnings, look at their management teams, figure out like what is their industry doing? How are they pacing against their competitors? And really try to become intimately familiar with that business, because those are businesses that you're basically marrying, right? You're in it for the long term and you're hoping to see a much, bigger return on your investment because you're going to invest for a long time, right? You're giving that company a piece of yourself for them to take care of. When you're doing something in the day trading, meme stocks world, your risk appetite has to be higher, right? You have to be willing to lose what you're putting in because you have no idea exactly what's going to happen. You also should be expecting a lot more taxes, on those short-term gains. So your, total net from the investment might be a little bit smaller than what you're initially thinking about. And really, it's something that you have to be paying super close attention to, right? If you're not willing to dedicate a lot of time and energy to paying attention to what these short-term investments are doing, it's not for you, right? It's a lot about knowing like who you are and what are you going to offer in terms of as being the investor, right? Are you going to be able to pay attention and make moves as quickly as you need to? If not, definitely focus on a longer term investment.
Yeah. I think you brought up something there that a lot of people have questions about, and I feel like Saira has the answer, but short-term capital gains, long-term capital gains. What does that mean? What do we need to know about that? How are they different? Saira, do you want to?
Oh, you're asking me. Oh, well, yeah. So twofold, and I want to chime in a little bit on what Lauren was saying too. But I mean, when you are in and out of trades, you just want to make sure that you haven't spent everything that you've made, because your short-term capital gains, less than 1 year, are substantially higher than that longer than 1 year horizon. So it's just something to consider. I know a lot of people that are getting hit with some capital gains taxes after doing some of the things that I like to do, which frankly, to give everyone a little bit of background, I used to be a derivatives trader, and I shifted away from that to work for a community bank, helping them hedge. And now I'm completely outside of that world, working at this neobank. And I think that you can kind of do whatever you want to do when it comes to investing. The key is to have a thesis and to execute on it. And I say that as someone that used to trade on a daily basis, and now as someone that's slowly looking at my portfolio for longer term goals and also for fun. I think meme stocks are extremely fun to mess around with, and I see nothing wrong with jumping into GameStop. If you want to go to GameStop, you want to invest in Dogecoin, go for Dogecoin, but understand A, that there's risk affiliated with it, and B, that you probably shouldn't have your entire life savings in Dogecoin. For a lot of the conversations that I have with my girlfriends surround their fear about investing in something. And I think the key behind having a thesis is saying, okay, I'm comfortable investing $100 a month, and I'm going to take that $100 and I'm not going to put it all into Bitcoin. I'm not going to put it all into the stock market. I'm going to put a portion into my savings account, which is still investing. It's passive income. It's still investing. And then I'm going to put a portion of my money somewhere else, whether you really like Lululemon because you do yoga every weekend, or you really believe in Apple stock because they're innovative, whatever thesis you end up coming up with, you just need to execute and dedicate yourself to it. And I think that's really how you end up hedging your risk for the longer term while still getting to do what you want to do on a daily basis. And that would kind of be my response on whether you're doing the swing trade thing or whether you're looking for the long haul.
Yeah, I think it's funny. It's not like you're one thing or the other. You might be mostly one type, but maybe sometimes you do something a little riskier. And I think the key is just understanding the context. And I think I saw someone bring up Reddit, not just chasing something because you see it someplace like Reddit, but just understanding the decisioning behind the people that are talking about it. And once you have that information, you can make your own decisions. Different people have different styles and economic abilities to take on risk. But it's kind of that moment of just understanding. Judy, what do you think about that whole long-term, short-term? I'm really interested because you work with your organization has a lot of people from Gen Z in it. And I'm curious what the Gen Z investor mindset is.
Yeah, I mean, I when I talk about it, I generally kind of break it into 3 buckets, which is saving money, building wealth, and then gambling, really, right? And so saving money, Claire already said right up front, stock it away in your bank account if it makes you feel good, but that's just saving money. That's not wealth building. And I think all of us here is really prioritizing helping women build their wealth. And that's sort of the long-term investments that we talk about, right? Whether it's your individual retirements or your company 401ks, it's less exciting because long-term is not exciting. I get that, right? And so I think adding in a little bit of gambling, which is sort of when you're Lululemon feels great to me. And I do that all day. I'm Airbnb seems to be obviously, very exciting. Let me pick up one of those. I think the benefits of doing that sort of gambling is that you then really care. I'm not super excited to track my ETFs that are sitting in my 401k, right? I'm just not looking at it regularly. I might obsess, over Lululemon because they just bought Mirror and I love Mirror. So I think getting women like having that give a factor on reading the news or just tracking market speak as early as possible is really beneficial. As long as women know that I could either go to Vegas or I could buy a couple of stocks that I personally use, and they just understand that like that kind of gambling is basically what you're doing if you're just going to say GameStop feels fun.
Yeah, there's different levels to risk even in the individuals. I think you mentioned ETFs, so let's break that one down. So ETFs are bundles of stocks, and you can buy or sell them on an exchange just like you would buy Apple stock. You can buy a share of an ETF. And ETFs actually I think they're getting a little more interesting. There's something called thematic ETFs where you could buy an esports ETF, you could buy a sports betting ETF, a crypto kind of genre ETF. And so you can, what's good about those is that you can say, okay, I think this sector or this trend I believe in, but I don't know enough to pick a winner. And those funds will kind of basket together individual stocks that takes away some of the risk because it's a bunch of stocks and not just one. And Kathy Wood is somebody who gets a lot of press. She has her ARK ETF. So yeah, let's just break that one down. Awesome. So we covered like the different styles. I'm curious to shift a little bit on just myths in the stock market. I think so working at Public was my first time working at a financial services company. So my view of Wall Street was, everything you see in pop culture. It's usually white guys in suits, Leonardo DiCaprio, like throwing money off a boat. And I think what keeps a lot of people, and especially women on the sidelines sometimes, is feeling like that culture is like kind of icky or not for them or too complex. So I'm curious what everyone here thinks the biggest myth of the stock market is currently, and let's bust those. Who wants to start?
I'll start.
Okay.
I think that one of the myths that I think, and this applies to women sort of across the board in general for everything, not just investing, but I think there's a myth that you have to like totally know what you're doing to start doing it. I personally, listen, I'm not an advocate for you losing your money, and I don't want anyone to invest more than they would be potentially willing to lose, especially if they're not feeling super confident about it. But I'm one of these people that is like, I need to do the thing to learn the thing, right? I can't just read about it all the time. And this is coming, I run The Balance, I run a financial website. And so I want you to read about learning how to do it. But I think the idea is doing it is going to be the best practice that you can get at getting better at it. And I think women often suffer from imposter syndrome for everything. And the idea is like, I don't know what I'm doing here, so I'm just like not going to do it at all. And I think the idea is just start with a little bit, get your feet wet, start learning. The more that you start and you get invested, you're going to be more interested in learning more about it, right? Because you have this like foot in the game, you have to know. It's like the same thing that guys always say about like why they bet on sports, right? They like, it makes the games more interesting that they watch. So the idea is like, if you are invested, you have a little bit more skin in the game to say like, okay, let me go out and actually learn more about this thing. And the snowball effect will just happen, and you'll just start to learn and start to get better at it, feel more confident, and you'll seek out more information naturally, and it'll just happen. But thinking that you have to know a lot or even have a lot of money to start doing that is just so not right? That's what's great about places like Public that just allow you to just like try it all out. You don't have to make these giant commitments. You don't have to sign any contracts. It's nothing crazy. It's like you're just trying something, and your confidence will definitely build over time. So I definitely think you don't have to know it all to start.
+1 to that. Sometimes doing it is a little different. I mean, who can relate to having a 401k for years and having no clue what's actually in it? I'm
like, what do I even log into to check? Do I have a 401k? Like, what's my login? Who knows? Up until I was like, I don't know, 32. I was probably in that boat. And I think the other thing, to what Lauren is saying is that like, it's not about dumbing it down when you talk to certain demo. It's literally like anybody would find things more palatable, interesting if it was just more fun, right? Whether it's a sports of I now really care because a couple of bucks of my bet is based on that team. And I think the other thing that I really think about, you know, in terms of like, how do I just make this meet you where you're at? Which is whenever you talk about, you know, your retirement savings, which like long-term investing, right? Which is basically retirement savings. People, understandably, they kind of glaze over a little because they've got 60 years ahead of their lives and they're just not that interested in thinking about long-term or retirement. And all I say is when they go like IRA, 401k, I hear those terms. What do they mean? I just say that's just investing. You just don't want to touch those dollars until you retire. But in terms of how you think about it, it's exactly the same as if you were investing anywhere else. And I think, you know, being able to understand, oh, it's not some like totally different animal. I don't care about that animal, but maybe I care about the Peloton stock. You're like, it's the same thing. And so I think if I think back to like some light bulb moments that I've had with sort of, you know, pre-professional or newly professional women, it's understanding, oh, investing is just investing. There's just different like buckets of money that I should think about in terms of what I'm investing for.
Yeah. I think just that you made me think of something. The best thing I ever did was somebody, like when I was much younger, showed me a compound interest calculator, because that dish will blow your mind.
Yeah.
And that's like the foundation of all investing, really, is the power of compound interest.
I was going to say, it doesn't always sound that sexy, but once you realize how much money you can make,
those numbers, those
like,
comments are so sexy.
Yeah, someone needs to do a full rebrand. I think Saira had a good tweet today about S1s. Did you figure out what the S stood for?
It stands for securities.
There you go.
It stands for securities, yeah. And just to kind of chime in on the myth busting, Katie, you were saying that it's just a boys club, or that is one of the myths. And what's interesting about Wall Street and about investing is that for a very long time, women were actually, they were held back from being able to invest. So I took a long, deep dive into women and investing and the history of it. And for a very long time, men actually didn't let women invest. So post Gilded Age, in the late 1880s, that was when women finally started to be able to take property for themselves. So if they had a husband and their husband left them, their property actually would be transferred to the husband's name. They had no ability to keep it for themselves. Then you hit like the early 1900s into, you know, the roaring 20s. And at that point in time, you have a lot of women that are extremely capable, and you start seeing like historical marks of women running the household finances, but still not fully having ownership. And a big piece of that had to do with men saying that women were too emotional to be able to invest. So they would actually not permit them to participate in transacting on Wall Street. So there's this long, terrible history of how women have fought to actually get into the same room, even to trade. And there's a lot of really beautiful books about it. I see that on there. I will drop in some of those books into the chat in just a second here. But it's something that I'm really passionate about now. And I think that women are actually extremely capable and financially literate. It's more a matter of getting to that parity and getting us comfortable with actually being able to invest, which is not something that a lot of women have done, which is one of the things that I think should be a priority for every woman. And it's not just your 401k. It's absolutely picking out stocks and equities. It's going out into the market and deciding if you want to go into real estate. It's deciding if you want to go into cryptocurrency. It's figuring out how to get involved in startups. All of those things are different types of investing that every single woman should be considering. And there's just this long history of patriarchal attitudes that have built this foundation that's made Wall Street seem further off than it should be.
Yeah, I totally agree. I saw a stat today that it's probably a little higher, but only 30% of women invest. And it's not like a capability thing. It's just this historical kind of setback that we're now catching up. But there's so many studies that show women are actually better investors. Sorry if there's any guys in here, but women are actually incredibly adept at investing. Female fund managers, I saw a Bloomberg report that in 2020 they were beating funds that were primarily led by men, and so it's not a capability thing at all. It's like an access issue, and also I think just representation. One of the things I love about the finance festival is how easy it was to find amazing, smart speakers. And I get so annoyed when people are like, oh, I need, tell me some good women to follow. And I'm like, what? Like, I literally could write down 100 people in 5 seconds. So I think things like just having people like you all here and having that representation is really important too. Cool. All right. Well, I'm looking in the chat for questions, and we have a few other topics, but continue to add in any questions you guys have as they come up. One thing I think that could be interesting to touch on next is the idea of kind of going back into the weeds a little bit. But the first thing I often hear when someone's just getting into investing is they say, what should I buy? They jump right to that. And I'm curious, understanding that, investing in a single company or stock is a little different and a little bit riskier than a fund or a 401k. What signals can people look to when making a decision? I know Lauren mentioned kind of financial statements. Some people look at company values. What are some of those signals, and how should women think about balancing those?
I can start. I think the thing that I always remind early investors is, like, when they look at, should I invest in this, and what's the price, and all of that, is just remembering that investing is all about future looking, right? When you invest in something, it's not because they've killed it for the past decade. It's because you think they're going to kill it for the next decade. And when you look at something that's priced at a price that it is, it's because investors think all the value is loaded into the future. And so with that kind of framework in mind, I think there's two ways to think about it. The first one is, if you really want to just say, you know what, I have zero ideas, but what are just like the themes that I'm hearing about? Okay, well, climate really matters. We've got an administration that's really going to put bucks behind it. So maybe I'm going to find a fund, like an ETF or index fund, that's really caring, if you were to search for it, right? Like climate funds, green funds, there's tons of funds out there. And by the way, they're actually like really cutely named. Like, these funds are like, some AI fund is like called bots or something, right? So it's very adorable and very consumer friendly. But so that's basically you saying, I don't know what companies really is, backing kind of where we're going with climate change, but it seems to have legs. So let me do that. So you can think about things thematically, right? If you think about AI, what's Elon Musk talking about these days, right? Like, so you can either just bank on a theme and find a fund there. Or if you're like, I'm maybe one level up from that sophistication and understanding, let me think about it in terms of me and my friends. What are we obsessed with? And I think a lot of women, to Lauren's earlier point about trusting our own gut, is that if you think about all you and your friends talk about is, like Roblox. Every young person that I know in elementary school and high school talks about Roblox. I'm like, well, that means something, right? And so it's actually a lot more sort of easy than you think it is in terms of what does it mean to invest in something. It doesn't mean that you go and do a deep dive into manufacturing unless you want to, right? It genuinely does mean, like, what do I think has some legs, using myself and maybe a sample size of 12 of my closest friends, that must mean something for this company. So there's two ways that I generally start of, tackling it, especially when I look at some of the chat of being like, I'm interested, but what do I literally do as a first step?
That's always the moment. Lauren, what about you? When you're looking, what are you kind of looking for?
A lot of the same stuff that Judy was saying. What I think about, I tend to think more thematically when I'm investing, right? I know, as a person who lives and breathes and works in, financial publishing and doing this all day long, my ability to do deep dives on company, because I'm just like, my brain is too analytical to like not do that, really requires me to take a little bit of the step back and think on the more thematic side of things, right? Saying like, what am I interested in? What do I know just is moving in the right direction, or something that I want to be associated with long term, or something that I know, if I'm doing a more short-term investment, what do I want for right now? But I tend to appreciate like the bigger bets on industries or movements as a whole versus saying a specific or individual company. I do like to invest in individual companies that like I use every day in my personal life because I feel like I'm a pretty good judge of I think what will be a successful brand or investment. But for me, it's really thinking about like what is going on in the industry. Are we really going to see, like, all right, is now the time to get into space exploration, right? Like, are we really starting to see this big movement here? I'm starting to think like, all right, we're getting to the place where this is something that we all need to get involved with, right? There are legs here, as Judy was saying, like there's something more to happen. But really, at this point, and I know we might talk about this a little bit later, but what are these companies about, right? Like, do you like what these companies stand for and, how they're operating their businesses is another really important thing to do. You wouldn't person that you didn't like what they did. Why would you give your money to a company that you didn't like how they operate or treated their employees or, it affected the communities that they're in? So thinking about those things is also a really good way for a younger generation, especially, and women who are in general just more compassionate and empathetic beings, to make an impact on the market, right? Like making more thoughtful investments is a way to improve our future. So, thinking about that as who you're investing in is the other really important thing. And I think what's been proven out about a lot of those kinds of investments is that people used to think that was just like a soft thing. Like you were just kind of doing it and really wasn't good for, investors in terms of profitability at the end of the day. But I think as our world is changing so significantly, having strong values like that is going to be really important for the future of your company. So that seems to be where I'm looking right now for when we're investing.
Yeah. Saira, what do you think there? I do think Lauren brought up an interesting point about the values, but for you, kind of, how do you like when you're thinking of where to put your money, what are you thinking about?
Yeah. So I start with like a more quantitative approach, and I want to differentiate because I feel like Judy and Lauren really encompass the qualitative side of it. And I know there's a lot of questions about like short-term trading. So if you're looking to do short-term trading, you're going to want to look at more of the quantitative, and that's looking at fundamental ratios. You're looking at PE, you're looking at price to book, you're looking at price to cash flow, you're looking at ROE, ROI, things that you're able to kind of extract out of the underlying financials to come up with a value to understand whether or not it's worth investing in for a brief period of time. There's an additional layer to that. So for me, I've come to a point in my life where I'd rather just read what a bunch of analysts are saying. So if you're looking to do the valuation and spend the time in an Excel spreadsheet, I encourage you to do so, especially if you're an initial investor. If you're doing your first few investments, take the time suck of the 2 to 3 hours to learn how to use Excel and understand how to do that underlying valuation. You can take it one step further by reading what analysts are doing and saying, because they have already done that analysis. I will also say, and it's one of my favorite sayings about stock analysts, is that a broken clock is right twice a day, which means every single analyst will have some claim to fame that they called some stock and made $1 zillion for you on it. So be wary of anyone that's shilling you one stock or one specific product. For me personally, I lean towards what Lauren and Judy are doing as well. So if I decide to do the quantitative stuff, I'll layer on a lot of qualitative stuff as well. And that's specifically in the ESG realm. So I'm looking at Just Capital, which if anyone's interested, we actually just released a podcast yesterday on this specifically. But I'm taking a look at understanding from reports such as those on Just Capital and such as those released elsewhere about how the quality of the company actually is. And that means, are they diversified at the executive level? What does their management team look like outside of just the diversification? What are their histories? Tesla fascinates me. You guys should take a look at their CFO, or the rotating door around that CFO rather. There are so many different aspects that you can take a look at, including like quality of like solar arrays, whether or not they actually have the implementation to be considered good for the environment, or if they're just claiming that they're a solar ETF. You know, there's all of those different aspects are kind of that top icing layer for me that seal the deal for whether or not I actually want to invest in an entity.
Yeah. I'm glad you brought up the analysts, because we get that question a lot. If you see in an app like Public or whatever you use, it'll say analyst ratings, maybe says strong buy. What does that mean? And I think Saira brings up a really good point. Analysts they're covering the stocks, they're studying them, but nobody has a crystal ball. Nobody could have seen COVID coming. Nobody can see if, you know, they filed for a patent, it fell through, and there's that. Don't live and die by the analyst ratings. I think they're kind of directional. And another kind of pro tip there is they're not updated in real time. So you might see an analyst rating, but maybe it's from 2 months ago and a lot has changed. So you can see how a lot of this is sort of like detective work.
And Katie, just to kind of add on to that, the flip side is when you start to Google stocks, like you want to look at the actual news. Don't look at what shillers are putting into your search engine optimization. Like there are some websites that are pushing stocks that they're literally just trying to do what I call the pump and dump. They're trying to increase that stock price and dump it 2 days later. So just be super careful when you're like looking up individual entities.
That's a good point. What should people look for when in terms of signals for something that might be that ilk? If it's not really a reputable source, or it seems overly one-sided, like how can you kind of pick that up?
I have never seen a website that's just like, here's my 5 best stocks, and thought to myself, these stocks are excellent. I should definitely invest in them. No one, the way that retail transacting currently works, there is not a chance in the world with the dissemination of information that anyone is significantly better than anyone else. So that's when I personally am like, I can't believe people are following like this particular blog, because that it just does not work that way.
Yeah. I think for general education, stick to sites like The Balance. But yeah, I think it's a good point. You do see a lot of that, and it's just kind of how the internet works. Those people search, you know, it's a self-fulfilling prophecy. Is Tesla a good stock? You're going to see articles that say Tesla is a good stock. If you look up, is Tesla's a bad stock? You might see the other way. So just understanding how the algorithms work, how the search engines work, I think that's super, super important. All right, I'm going to dive into the Q&A because there are a lot of really, really good questions in here. Somebody asked differences, if someone could quickly spell out differences between tax advantage retirement investing, 401k or Roth, versus investing in a brokerage account, and how to think about those. Can someone break that down? This is for Christiana. Does anyone want to dive in?
Lauren, I can't tell if you want to take it or.
No, yeah, I'm like,
I feel like that's
Go ahead.
all yours.
Are we pointing to me now? So
get in there.
Yes. Yeah. So really what the difference that you're talking about are tax advantages, how long you're planning on keeping, you know, your investments into the account. And there's different, like if we're just talking like 401k and IRA, like we're talking retirement versus brokerage specifically. Retirement, you're planning to keep it. There's advantages to keeping it until you retire, right? Until you get to 65 or over, or I believe 65 is still what we're calling retirement age now. And you have an advantage until till you remove money until that time. The brokerage account allows you to move the money without penalties, don't have the same tax advantages of doing that ahead of time. Sorry, I'm getting a little bit of an echo over here. But you're able to move your money around a little bit more freely there and remove it versus those tax advantaged retirement accounts that you're keeping there until you get to the retirement age. Is like the easiest way to understand, I think, the difference between them.
Yeah, and I think Saira brought this up, but it's not either or. You can do a lot of different things at once.
Yeah, you should be doing a lot in all of them. ideally,
Yeah.
right? There's like the long-term retirement accounts are, like they're there for the reason. Like they're a mainstay for a reason. Everyone invests in them for a reason. Like it's good, right? You want to take advantage of those, tax benefits as much as you possibly can. So that when you need that cash, when you retire, you've got as much of it as you possibly can, right? And you're not stuck with this huge bill at the end of the day. So having cash, having money set aside there is really important. But growing your wealth, like we've been saying, in a brokerage account is amazing because you can do so much more with it. There's so much more flexibility that you're able to do. It's really about like, I think it's wrong to think of it as just savings, but the retirement stuff is really savings, even though you're investing it, right? You're saving that money. You're not really spending it until you and your other income streams are down. Brokerage is going to help you throughout your time.
Yeah. Somebody made a comment. They heard the best investors are those that lose their passwords, and they're talking about the really long-term stuff.
Mm-hmm.
But that's where the time frame really is important, because if you're doing a shorter-term thing, you definitely don't want to lose the password because you want to watch a little bit more. So the shorter the time frame, the more kind of active you need to be watching it, following it. Longer term, maybe you look once a year at what's in your 401k and that's it.
I think this is why when people say like investing is like a roller coaster, it's not quite apt, right? You're not, because long-term investing, don't jump out of the roller coaster. If you don't jump out, you don't care if you're high or if you're low, right? So it may be emotionally you feel like that, but even emotionally you shouldn't, because you don't need to touch it for another 40 years. And so I think there's like, if we can clarify that investing for the most part shouldn't feel like I can't go to bed at night levels of roller coaster.
Yeah. Got it.
Yeah, I mean, this past year is the best example of it, right? Like this was even the shortest microcosm of what that is, right?
Yeah.
You see, it bugs me out every time I think about it, but in March of last year, we were like, holy shit, we are all screwed. Like our money is gone. And guess what? At the end of 2020, my 401k was up over 20%. Like it is insane. And honestly, guess what? Next year, it could be down. Like you never know what's going to happen. But the idea is like that was a perfect microcosm of when you are invested for the long haul and you could just sit on your hands and wait. You don't have to be terrified by hitting like these dramatic lows in the stock market, because you know what's going to happen is like eventually it's going to come back up. Like that's what the stock market is meant to do. So being in there for the long haul is good because you just, like Judy says, you don't have to lose sleep over like, oh, well, I'm down right now, but guess what? In maybe even a year, I won't be.
Yeah. I saw a question here, and I'm actually curious about this one myself. They were asking about when to consider using a financial advisor or coach, or what generally the panel thinks about financial advisors or coaches. Saira, you look like you have.
I don't think anyone's going to enjoy my response. So how I feel about financial advisors, I personally do not use them. That's not to say that other people shouldn't. I do think that if you put your money into a bunch of ETFs, which is the least sexy thing in the world, and I know everybody hates it, but if you just put your money into a bunch of ETFs just to kickstart yourself because you're nervous, then you'll perform the same as a financial advisor and you'll pay a significantly lower fee. So when you guys are taking a look at whether it's a mutual fund or an ETF, there's an expense ratio. And the lower that expense ratio, so the closer it is to zero, the lower you're paying to have your funds managed for you just through your brokerage account. Okay, so there's somebody back there that's either picked a basket of stocks in terms of the ETF, or through a mutual fund, they're actively managing it and they're taking a tiny little fee to manage it for you. So that's essentially like having a financial advisor. If you're not into that and you want to test out robo-advising, that's like the other realm. Robo-advising is in a lot of ways more expensive than a financial advisor. In some ways, I should say, not a lot of ways. But there's so many different platforms that do that. There's one Ellevest that's specific for women. There's Acorns, which is for people that just want to do tiny amounts of money. The buckets are a little bit more restrictive, but you can go that route. There's Wealthfront. I mean, there's just so many different places you can test out that will automatically invest for you as well. But in terms of financial advising, I personally feel like I don't know. I personally don't advocate for that. I think it's a little bit more fun and it gets you more involved in your finances if you're doing it yourself.
I agree wholeheartedly. I think, you know, if your financial life is starting to get real complicated and you have like a lot of capital to play with, well, first of all, congratulations, right? If you're like, I got a lot of money to play with. But I think most of us are not that complicated, right? So you do not need a financial advisor to say, here are 10 different ways to deploy your capital. And by the way, internationally, and like, that's really where, you know, the wealth manager can add their value for what they charge you, is if you really want to get complicated. It seems to me in this room that we're not quite there yet. That, and I think exactly to what Saira said, is that if you get into a room with a financial advisor new to the game, they're going to vomit vocab at you that's just going to make you look at them and go, I don't understand what's going on. This actually takes away my confidence. I now am completely frozen and I don't know what to do. So I actually don't think it's beneficial to sit in the room with a financial advisor if your life isn't that complicated. And like most of us, kind of trial and error before we even find someone that we like.
And I want to plug something else in there. Rather than spending the money on a financial advisor, can I just recommend to everyone, get a good accountant. A good accountant will tell you everything to do and how to save on your taxes, and they'll do your taxes for you, so nobody has to have a migraine. Yeah. Like, I can't advocate that enough. Sorry, that was the other thing that I was thinking about. Spend the money on an accountant instead.
I will tell you that I am the sole, I think, your financial advisor pro.
All right.
I don't, you know, I totally agree with everything that Saira and Judy said about financial advisors and really what you should do. I think I am like, this is such a like dumb New York thing of me, but like, guess what? I pay for convenience, and I like when my financial advisor helps me get my shit done. I will say that exactly what Judy said. When I started working with him, it was really sort of like intimidating and I didn't really know what I was doing. And then I got this job, and I also started making a lot more friends in this industry and started understanding a lot more about finance. And I felt like so much more empowered. And I remember like the first time I had a like come to Jesus moment with my financial advisor, and I like reamed him out for telling us to get whole life insurance. And I was like, like, you are not helping me or understanding my goals. And we have actually had a much more successful relationship like since then, since I just like made my, you know, my path and what I wanted to do known and made sure he recognized it. I will say that like he has been really helpful for us in terms of, you know, our life has got a little bit more complicated recently. We had a baby, we bought a house, you know, our lives financially have changed. It's been really helpful for him to help us guide into a lot of the areas that we aren't familiar with. So he has introduced us to a fantastic accountant, introduced us to our mortgage lender that like I went and then shopped around for rates against, and then like came back and compared to. So I think it's been a really helpful intro when I wasn't as confident. And then now that I am much more confident in all of these concepts, I'm able to use him more as a sounding board for me, which I find to be really useful, right? Money is still this like weird taboo subject for a lot of people. And I think having this person that knows everything about me and my financial life, I can talk to him in a very honest way. And it's also this like weird thing when you have a partner or someone that you're combining finances with. Like I have a husband, and it's also very helpful to make sure you're always talking about these things. You put everything on the table, like nothing is, you know, getting swept under the rug between either of us. We have this like ultimate confessional where we like talk to our financial advisor about everything that's going on a pretty regular basis. And I find that for us is like helpful, right? Because you can't always have those super honest conversations with everyone around you. And I know that a lot of what we're doing right now is working to a place to do that. but not everyone in your orbit is comfortable having those conversations with you, or not everyone in your orbit is at the right level of confidence in their finances to give you the best insights and advice. And sometimes it's great to have someone there that is you're essentially paying to listen to you and give you a lot of good input.
Yeah. Well, we're coming to the end, which is crazy. I think we need a part 2 soon. Hopefully my laptop won't die in the middle. That's why I'm sitting in the dark, by the way. I didn't do that on purpose.
Love you, Katie.
I was literally at 4%.
I was she's going into night mode. She's
I was sweating bullets. I really got down to the wire. But thank you so much, all of you, for being here. We should definitely do this again. And thanks for the 500 people who showed up to talk about stocks on a Thursday night. I think this goes to show that.
Are the coolest.
Yeah. We all rock.
However, we have to do this again.
Yeah. And a couple housekeeping. RSVP to the upcoming events. There's going to be some super surprise announcements next week that might blow your mind. We have some really good announcements in terms of our closing keynote and some other things. RSVP to the individual sessions. You can find those at public.com/finance-festival. And there will be recordings of all of the talks on the Ladies Get Paid YouTube channel after this is all done, so you can relive the glory. And let's all keep in touch. Thanks again so much. Please thank our panelists in the chat. Lovely talking to you guys, and I hope everyone has a great night.
Bye.
Bye.
Yeah.